Have you ever wondered if Bitcoin mining, a notorious energy guzzler, could actually expedite our transition to renewable energy? It's a paradox that's been intriguing minds given the controversy surrounding Bitcoin mining and its environmental impact. Bitcoin mining operations are infamous for their carbon footprint, with emissions estimates comparable to entire nations like Morocco. Yet, a recent study in the PNAS journal proposes a fascinating solution, coupling Bitcoin mining with green hydrogen production. This partnership, hailed as a dynamic duo by the study, is a delicate dance of intricate conditions and policy maneuvers. The premise of the study is to redirect Bitcoin mining profits into renewable energy infrastructure investments, particularly solar and wind. This would mean using clean energy sources for mining operations, potentially mitigating Bitcoin's environmental impact. But the feasibility of this idea hinges on crucial factors, like who's doing the mining and how the funds are managed. Intriguing as it sounds, how could this radical idea work in practice? Imagine a world where Bitcoin mining profits fuel investments in renewable energy infrastructure. Quite a bold idea, isn't it? This is the crux of a recent study, suggesting a unique alliance between Bitcoin mining and green hydrogen production. The study proposes a shift in the usual players of the Bitcoin mining game. Instead of traditional miners driven by profit alone, it encourages the involvement of energy companies or climate-conscious groups. This switch aims to align financial gains with the progression of renewable energy. Imagine this: the sun shines, the wind blows, and instead of going to waste, this clean energy is harnessed to mine Bitcoin, generating profits. Profits that are then funneled back into growing our renewable energy infrastructure. Now, where does green hydrogen fit into this picture? Green hydrogen, produced using renewable energy sources, acts as an intermediary. It works like a battery, storing the energy produced by solar panels and wind turbines. This addresses the challenge of intermittency that plagues these renewable sources. And Bitcoin? In this scenario, it becomes a virtual energy carrier. It's like a digital bridge, connecting the energy produced to the profits generated, facilitating the transition to a cleaner energy landscape. But as promising as it sounds, executing this plan isn't without its challenges. The path towards a greener future, powered by Bitcoin and green hydrogen, is riddled with hurdles that need to be acknowledged and overcome. Turning theory into practice is never a straightforward task, especially when it comes to Bitcoin mining. The operational costs of mining, for instance, are staggeringly high, and that's before we even consider the complex dynamics of energy markets. It's like trying to solve a Rubik's Cube while riding a roller coaster. Then there's the issue of Bitcoin's infamous price volatility. Imagine trying to plan a long-term investment strategy, only to have the ground constantly shifting beneath your feet. It's a bit like trying to build a castle on a beach, with the tide constantly threatening to wash your efforts away. Now let's look at a real-world example. Texas. The Lone Star State is a hotbed for Bitcoin mining, thanks largely to its abundant energy resources. But integrating renewable energy into these operations is a tricky business. It's a delicate balancing act between economic interests and environmental considerations. For instance, energy credits offered to miners during peak demand periods can distort the financial incentives. Critics are quick to point out that Bitcoin, by its very nature, is a consumptive asset, not a generative one. They argue that this limits its potential to act as an energy carrier. But proponents see things differently. They view Bitcoin not as a roadblock, but as a stepping stone towards a more sustainable future. While critics argue about Bitcoin's limited role as an energy carrier, proponents see it as a potential catalyst for sustainability. So where does this leave us in the grand scheme of Bitcoin mining and renewable energy? The potential of Bitcoin mining to expedite the shift to renewable energy is an exciting prospect. The idea of harnessing the profits from Bitcoin mining to fund investments in clean energy infrastructure presents Bitcoin not just as a digital asset, but as a possible catalyst for a sustainable future. However, the implementation of this concept is laden with challenges. It requires a strategic shift in who conducts Bitcoin mining and how the profits are allocated. Energy companies and climate groups could play a significant role, but they'd need to navigate the complexities of energy markets and Bitcoin's volatility. Robust policies and alignment of financial incentives are crucial to ensure that Bitcoin mining revenues are funneled into renewable energy projects. The synergy between Bitcoin mining and renewable energy is an enticing prospect, but realizing this vision demands concerted efforts and innovative solutions.